What is up, Honey Badger Nation? Welcome to another episode of Expert Mentors Live. Really excited for today's conversation and being able to jump in as we look at where opportunities are shifting, where there's as we navigate waters in certain markets, there's always an opportunity somewhere. And I've had some great conversations with agents, and in fact, one of the agents that we sold our brokerage to, he actually brought this up to me last year, talking about kind of getting, an opportunity is going to be what we're going to talk about today, become educated, become versed in it. And so, having the opportunity to dive in deep on this topic is going to be great. And I'm super excited to have Craig on with us. Welcome.
Thank you. Good to be here.
And, really our Expert Mentor series is really about pulling, the best of the best out to really come from a place of just education and adding value. And, I know today's going to be no different as we start to dive in and really, unpack where the market is, where it's going, what this product even means, what it means to you as an agent, what it means to the consumer. And so before we jump in though, Craig, I would love for you to give a little background, give a little context, kind of your story and kind of where you started and kind of where we're at today.
Sure. So I am a real estate broker, probably like most of your audience still today. I got into the real estate business sort of accidentally a long time ago. I was 19 years old when I got my license in October of 1995. My dad was in the commercial side of the world. I had joined the United States Army Reserves to help pay for college. My training schedule didn't let me start college. I had a free semester, and he said, well, heck, you could get a real estate license. It was like 12 days at the time to do it. And I was like, okay. And I started tailing him around, and he was working on some pretty big commercial things, and my eyes got really big. And I said, okay. So I worked for him all the way through college. And, but I eventually learned that I needed deals that closed on a regular basis, not every couple of years. So I gravitated in the residential world. And, when I got my license at the time, in the mid 90s, we were kind of coming out of the last cycle where an assumable mortgage made sense. We would occasionally see a non-qualifying assumable pop up, and we'd run out the door to try and do it ourselves. But most of my career, I've spent a lot of time sitting at tables, closing tables with clients, especially VA clients, because we have a large military presence in my market, which is Colorado Springs. And the topic of the assumable nature of the deed of trust and the mortgage would come up. And I would always make the comment that if we ever find ourselves in a rising rate climate, they're going to have an asset. Well, along comes 2022. We're in a rising rate climate, pretty serious rising rate climate, coming off of the absolute lowest rate climate that's ever existed. And so I went to a partner of mine who owned the largest title company in town with the idea of creating a company that was actually modeled off of another company he started, a company that would help people complete mortgage assumptions and, help agents do more business, help clients, buyers save money, help sellers leverage an asset that they have. The company it was modeled off was something he created in the last downturn, which was a company called Short Sale Solutions. His goal was to get agents in the market to come in and bring them their short sales. They process them and deal with the servicers on their behalf for a fee. And I said, well, let's just adapt the model and do the same kind of thing. And so that's what we've created. And since mid 2022, we created Assumption Solutions, where our model is simply that, to take the burden off of sellers, buyers, and their agents on figuring out how to get a mortgage assumption completed. And here we are today, and we're doing this nationally. We have a lot of business in our Colorado Springs market because we've done a lot of training in our Colorado Springs market, but I have started focusing my efforts on training agents nationwide, because somewhere between 20 and 30% of the market is FHA, VA, and USDA, which are the only assumable mortgage products in the market today, which are all qualifying assumable mortgages.
Mm. Take us and break it down to the fundamental, even to what that means, right? And even
Sure.
to, with such a large percentage of the, real estate community being, relatively new to the industry. And even when you say short sell, they don't even, fully understand what that means. And even if you want to define that as well, I think will be really beneficial and educational for folks listening in, so they understand kind of the difference between a short sell and then even what an assumable mortgage is, right? If we can just kind of break it apart at, third grade level, that's kind of like how I like to operate on third grade reading level. So
you got it. That's what I'm spending my time doing. Because, I got into this and started this. The thing I didn't realize was how little knowledge about this was in the marketplace.
Mhm.
And so the people that I found that have any knowledge of this tend to have a lot of gray hair, because they've been in the business 30 years, and that's the last time these things were around. So let's talk about what an assumable mortgage is. An assumable mortgage is a loan that's in place on a property that when a buyer comes in to purchase a home, they can take over that loan instead of getting new financing. The old stuff that used to be out there oftentimes was what they called a non-qualifying assumable, where anybody could show up, say, I want to take it over, sign a piece of paper, and boom, it's your deal. That stuff's all gone. The only loans that are assumable in the marketplace today, like I said, are VA loans, FHA loans, and the small number of USDA loans, maybe 1% of the marketplace rural product out there, right? And they are all what is qualifying assumable, which means that anybody who wants to take them over must qualify in the same way and to the same standards as the borrower who originally took that note out. Okay. Right. And so one of the big things to think about is in a transaction, the transaction's fairly normal with a few exceptions, right? You think about it, you put a home on the market, any home, you usually have a seller who has a price that you're going to ask for the home. And then there's hopefully a bit of equity in there that they're going to take when they sell the home. And the loan that they had to buy that's still in place on the home is what gets paid off at a normal closing. In this scenario, the sale happens, the loan doesn't get paid off. It becomes the responsibility of the buyer who bought the home that qualified to assume it. So you sell a home for $500,000. The home has a $450,000 loan on it. The difference we call the assumption gap. We try to train people that is effectively your down payment, the amount of money you need to bring in cash, and then you process, instead of processing with a loan originator, a new loan, you process the qualification with the existing servicer of the existing mortgage, which is the role effectively that we fulfill as a company, Assumption Solutions. Our role essentially is we collect everything that we need to from a seller that allows us to communicate with their servicer, and we collect everything from a buyer, once the contract is put together, that the servicer is going to require to take them through the process to get them qualified and approve the assumption. And we deal directly with the servicers for a fee. Our process fee-wise, just to discuss that real quick, it's pretty reasonable. We charge each party, both the buyer and the seller, a fee, and that fee to each party is $550. So effectively, when we're involved in a transaction, it's $1,100. We collect a $50 kind of engagement fee from each party, and then we start processing. And then once it's approved, we collect the remaining $500 from each party. So for $1,100, our goal is to make the process simple for the buyer, the seller, and the agents who really, as from my perspective as an agent, like I don't want to get involved with the messy middle stuff that I have no knowledge and experience on, essentially. Right. So now let's talk about some of the, like you said, breaking it down into the important pieces that people need to know with an assumption. The first thing I want to talk about is the VA assumable. A VA loan is a veteran benefit specific to service members who have eligibility, right? When that veteran wants to sell a home and allow somebody to assume that mortgage, anybody can qualify to assume that mortgage, whether they're a veteran or they're not a veteran. But there are some caveats that are important. A veteran has a certain amount of eligibility for a VA loan that is kind of like a cap, right? When a veteran allows another veteran to assume that loan, as long as the veterans both have enough eligibility, they can swap eligibility. Meaning when the home is sold, not only is the seller released from liability or responsibility on that loan, their eligibility is released because the new veteran swaps on their eligibility, right? If you go veteran to non-veteran, they're released from liability and financial responsibility for that loan, but the eligibility portion that was used on that loan remains tied to that loan until it's gone or paid off, right? And so that doesn't mean a veteran's total eligibility to get another VA loan is gone, but it would be reduced, obviously. Eligibility, it's kind of a complicated math problem almost for the marketplace, right? So I can't say it's a certain dollar in every market because it's not, but like a veteran, if they allow another non-veteran to assume their loan, let's say they come out of a sale with a bunch of equity, so they have a large cash down payment on their next purchase, and they only need a certain amount of loan, they might still have some eligibility to use and they can get another VA loan. So it's not easy to quantify in that scenario. What we're seeing in what we're processing is we're seeing quite a bit of both. We're seeing veterans who only want to go veteran to veteran. Mm-hmm. And that's a decision that I think as agents, you need to be able to explain and let your seller make the choice as to what they're willing to do. We have seen veterans who don't care. Specifically, maybe somebody who's coming with a lot of equity out of a house, or, is going into their last house and, they don't really have to get that next VA loan. So, and sometimes we're seeing people that are just like, whatever it takes to get my home sold. Veteran, non-veteran, I don't care. I need to get out of this house. I need to be in something different. I'll go get a conventional loan in the future. Because at the end of the day, some people just have to get it sold, and whatever gets the home sold the fastest.
Right. So speak to, just because where my mind goes, looking at, the really kind of the four parties here, right? So we have the seller, the buyer, the seller agent, the buyer agent. So there's like four different perspectives and understandings. And, I think that's where you guys benefit, because then you're able to play the middle ground to handle everything. So these agents and everybody doesn't have to truly be experts and know everything. So kind of speak to, if you don't mind, kind of unpacking the benefit of a seller allowing this, obviously a buyer, wanting to do this with a rate, keeping taking if it's a great rate, a great loan product. So can you kind of speak to that? I think this will help, as agents listening in, to be able to understand the benefits, to be able to articulate it to whoever they're representing, and then obviously making the connector, for you, say, hey, we got a great solution that can handle this, keeps us out. It's not going to be as messy. It's pretty straightforward. But if you could speak to the benefits, I think that'll be really insightful.
So you want to sell your home, you're a veteran, or you have an FHA loan or USD loan, it doesn't really matter, right? Your goal is to sell that home as fast as you can for top dollar. It's pretty much everybody's goal. So in any scenario, when you're putting a home on the market, the goal is to have your assets marketed and leveraged, right? Whether you've got a remodeled kitchen, a great lot, a great view, some other special feature or condition. Another benefit that you have, another piece that you have, is you have an assumable mortgage. So you're putting your home out in the marketplace in a declining market, and you want to attract a buyer to get
most amount of money.
The most of your money, right? Let's say their neighbor's house is exactly the same as yours, but it's got a conventional loan on it, right? You're going to say, okay, we've got competition. How are we going to be able to sell this home for the most or faster or differentiate? You have the ability to say, well, we have this extra asset that our neighbor's home does not, right? And that doesn't mean you're going to absolutely, when you market this home, sell it to a buyer who wants to assume the loan. But it's one more piece to offer, to put out into the marketplace to try and get you sold faster or for more money. What I tell people right now, a lot of my training is it's hard to quantify at this point whether you can truly get more money for your home. But I think having this gives you a bigger pool of buyers, which will hopefully get you sold faster, which if you're in a declining market, selling faster means you have to do fewer price reductions, hopefully. Right. And so it's just one more piece. Now, I do believe the more this information gets out there, the more the public knows about it, the more the agents know about it and can articulate the benefit to buyers, the greater the pool of buyers that are hunting these. We're starting to see exponential growth in the reach. Matter of fact, I'm starting to get, through our company website, buyers from all over the country reaching out to us to connect them with agents that know about this product and the how to find these. So as a realtor, this is a benefit to me. I'm sending out quite a few referrals this week. So the benefit to the seller is that. The benefit to the buyer is way more obvious.
Right.
You take a $400,000 loan at 3%, 3.1%, somewhere in there, and you compare it to a $400,000 loan at like 7%. The savings is like $953 and change a month.
Yeah, significant.
It's amazing. Yeah. I'm gonna highlight one of the deals that we're involved with that is my favorite story so far, not just on the payment and the rate savings. We've got somebody assuming where the loan is 15 years old, right? And the assumption gap, the difference between the price and the loan they're taking over, is $500,000. The buyer, it's going veteran to non-veteran because it's an elderly seller who's like, I don't need my VA. They're walking away from the eligibility, but they're getting a lot of cash. And the buyer sold a home in another market, has the big down payment, is assuming it's an $800,000 some odd sale, a $300,000 loan that they're taking over. The rate's not, the lowest of the low, but it's lower than what you could get today. But they're walking into a loan that's half the term is gone. And in an amortization situation, so much of the amortization is front-loaded interest. Right. That it's my favorite deal that I've seen so far. I'm like, that's what I need to look for. So, I love it. I love it. But for buyers, for agents with clients, I have personally resurrected a number of clients in 2022 who they're kind of move up people. They have something to sell, so they have money to handle a gap. But to buy, they're payment sensitive. They can only afford so much that they're comfortable in. And so I've been able to say, okay, look at this. The great thing is about the education and the spread of this is I keep a search in my MLS open for assumables, and I am seeing emails every day as more and more and more of these are found, because I think in our marketplace between March of 2020 and March of 2022, we did a check and 14,000 VA loans in our county were either originated or refied that, they're all below 3.5.
Mhm.
That's one county. So yeah, it's a significant market, and there's significant opportunity. The opportunity would be greater even still if, one thing I didn't mention that I do want to mention, if this was an opportunity for investors. This is only an opportunity for owner occupants. No investor can assume a VA, FHA, or USDA loan.
Yeah, thank you for pointing that out. How do you guys go about the educational process and educating agents how to really, one, approach the conversation, and because just not knowing how to bring it up and then go through and educate, at least a little bit of education on it, but just how to have that conversation with the seller. I love how you said it's the benefit. It can be a differentiator, it can set us apart from the rest of the competition. Obviously the buyer, hey, being able to look through it this way, but how do you kind of educate and train agents to how to kind of start or even have that conversation?
So we are doing webinars. We actually have a training schedule posted on our website for future classes. We have one of our the webinar we did yesterday recorded for somebody who can't attend a live one on our website. But how we train them, the specific things we're telling them is let's talk about the listing agent perspective. We actually have a flyer that you can download for free, incorporate into your listing presentation, that is designed to educate the seller about the asset they have. Because I think if you're going to a listing presentation and you're competing against a couple of agents and they have a VA loan, well, just simply talking about the asset that you can help them market if they want to go that road is one added benefit that you can bring to the table as a listing agent, right? So educating the seller about what they have and about why the market would want it. Being able to show a seller, okay, you see your payment on your mortgage statement, which I always look at mortgage statements when I'm on a listing so I can do the net sheet correctly, right? I'm like, okay, your payment is $1,700 on this $400,000 loan, right? That same $1,700 would probably only get a buyer, I don't know, round numbers like 275 or something like that today. Being able to highlight the difference, right? So you want to be very educated as an agent to be able to show contrast to people, for clients, but both buyers and sellers. So then educating agents we spend a lot of time to try and educate listing agents to properly expose these to marketplace so that people can find them. Check your MLS. Does it have fields for this? Ours in Colorado Springs does. And, our MLS provider is the same provider that does a lot of them across the country. They could be modified if you don't have it. You just need to talk to the powers that be to get these fields added for search fields. But ours is a standard field that was always a requirement to check yes or no. Nobody was ever checking yes, but they're doing it now. And then they could start putting in the loan balance, the PITI payment, the interest rate, so getting people to put that in there, getting people to add things where they can to remark sections, getting people to add things to when they take a listing. Who doesn't put it out on social media these days? Are you highlighting, hey, by the way, you can buy this house, put this amount of money down and get a payment that's $2,000 a month, which is maybe $1,000 less than if you bought it without assuming this loan, right? Getting buyers to see it, getting your fellow agents to see it. The more your fellow agents know about this, what we have found is the more these take off in our local market. Agents start specifically hunting for this for clients. Attracting new buyers, attracting new sellers. Obviously, we all use whatever tool we can to reach out to people, whether it's social media tools, video tools, teach classes. You can leverage us. You can leverage our materials. You can make it your own. You can take anything I say and make it your own. We want you to succeed because obviously we're a volume business, right? If you do more deals, we do more deals. So we're behind people getting as educated as can. Direct mail. There are data sources out there where you can target people who have these kinds of loans,
right?
And farm them and go that direction if you need to. So so I didn't expect to spend as much time on the agent training and talking about this when we started it. My initial marketing efforts I thought should be to the general public, and that was a complete fail. So I reversed course, because what we saw was when we taught the classes in Colorado Springs, the agents who were on the front lines of talking to the clients were the ones who spread it. And so that's where we do most of it.
Yeah, I would agree. I think, I love that. As far as, it's brought up, is there anything that agents need to be aware of, kind of even structuring the offer or putting things together that you guys have seen that will help keep the process as smooth as possible?
So I haven't talked about the process timeline. It's not a 30-day sale. It's not you write your contract and you're going to close. We brought up the short sale stuff at the beginning, and, short sales, for agents who don't know what they were, is effectively a house being sold where the mortgage balance is higher than the price you can get for the house. So we would have to go to the lender or lenders, often there were multiples back in 2008, and negotiate that they take less than they're owed so that the sale can complete and the property releases to a new buyer. That was a massive pain point for lenders, a massive pain point. And so that process was where lenders were finding, they were analyzing their seller, their client, for any dollar they could squeeze out of them.
Yeah.
And they had thousands and thousands of them. So that process, there wasn't motivation for them to get those done. Not that there's more now, but it's not a pain point. It would take a year.
Yeah,
frequently.
Sometimes.
Yeah, sometimes. I think my longest might have been 2. We are seeing that this process, you need to expect, if you're lucky, 60 days, more likely closer to 90 days, right? So when you're writing a contract, your contract works as normal, with the exception of you don't generally need an appraisal. So you don't have an appraisal issue there. But, all your normal things you do in a contract are there, but one of the last things you need is a loan transfer approval deadline, because that is the existing servicer saying, okay, we've reviewed everything, we have everything, we're good to go. And that takes time for them to get to, because number one, every one of these, there's no like desktop underwriting, it's all manual, every single file. And the biggest challenge right now is the servicers. Most of them have no idea how this process works.
Right.
They haven't been doing it. They don't have staff for it. And so when you start this process with a seller, the first thing a seller should do, because we don't get involved until you actually have we'll talk to you, but we don't get involved until you actually have a transaction. But the first thing the seller should do when you take that listing is reach out to their servicer and order their assumption packet. But I'm going to caution you and warn you to discount all the naysaying you will get from a servicer. You will get servicers that tell you things that are patently false, misleading, and oftentimes contrary to probably legal responsibilities that they have. Matter of fact, as part of our stuff, that when we send the package and start working with the servicer, we kind of have hey, you better be careful, servicer, because if you do something that creates a loss for your client and the client that wants to assume this, and you don't follow the guidelines, because this assumability is a benefit. It's a benefit to the VA buyer, the VA FHA buyer. So if you don't do and meet your responsibilities, you could be opening yourself up to legal liability. I'm not an attorney, and I don't play one on TV, but I'm not blind when I see losses to see where they could get in trouble. So we have found some good servicers that really love us, that they're like, man, you've educated us, you're helping us, we're learning this process. But as it gets better, hopefully that timeline shortens, but your last timeline needs to be out there for the approval. And I think all parties actually still need to be a little bit flexible. Like you need to talk about, there could be a need to extend. You know, if you're lucky and everything's smooth and you got a servicer with a good department, great. But we don't see that yet. And so expect the timeline to go there.
One thing you said, Craig, real quick, you said, there's no appraisal on these. And so the assumption gap is essentially from whatever the loan is to whatever we agree on price. So,
Correct.
so there's no justification of it. There's no whatever we come to agreement on price is price. And that's it. And so there's nothing backing that value. And as a buyer, you just have to be okay with that if you may be overpaying a little bit.
Well, I mean, hopefully you're working with an agent who's comped it for you, right? And before you made your offer, been able to see, does it make sense? And hopefully that listing agent hasn't just thrown a price out there, hoping it would stick to the wall. But at the end of the day, yeah, it's the lender, as far as they're concerned, they're not taking anything different on with regards to the asset, which is the home, right? If the loan goes bad, they're going to foreclose based on when that loan was taken out and put in place in the market. Yeah, they don't, there's no issue there. So yeah, there's no appraisal there. Let's talk a little bit about the gap, because we get tons of questions about the ability to finance anything in the gap. There's no guideline from the government entities that says you cannot. We are not seeing it happen at all, because number one, good luck finding lenders in this climate who want to be second mortgage holders.
Mm-hmm.
They have memories from the last downturn, which second mortgage holders got wiped. And then two, the servicer who's approving, we're not finding them to be very open to the idea of financing that gap. And they have some discretion. So from the servicer standpoint, right, it's not a pain point like a short sale, because they're not losing money necessarily. But if they could get rid of a 2.5% loan and lend that money out again at 6.5%, they do have motivation to do that. So if they could find a reason to say no to the deal, which we have found them try to throw a lot of things out there, and believe me, we go to bat. This is where our money is really earned. We go to bat, and sometimes we knock ridiculous things that they say out of the park. And so, but if it's because you're of financing the gap, we think they can say no, and that just be it. And there's nothing we can do about it, because VA has specifically said to us, we can't force them in that arena. So yeah, there's other things that we get VA involved with, from goofy things that servicers say.
No, I get it. It makes a ton of sense. And so, I just kind of thinking through where you see, I mean, this is going to gain, I can see it gaining some traction, especially in specific markets where those type of loans are driven. Lawton would be one, being a, Fort Sill being a military town as well. So you would see a large percentage of the VA loans there as well as an opportunity. And that's, I kind of mentioned, starting out talking about Stace bringing this up to me last year, that he thinks it's going to be an opportunity, and so really seeing it in his market.
They're all over though. I had a conversation with a guy last night who is an oil pipeline worker in Alaska. He's got an FHA loan, and he's got a buddy who, I mean, there's not even agents involved. They've already put the deal together. They just don't know how to get it done. And so, but yeah, I mean, obviously, like my market with that many VA loans, it's bigger, I think, here.
Sure.
Know your market stats though. I mean, even in Colorado Springs, even as big as we are, we're only, I think 30% VA FHA.
Yeah. That's about Lawton as well. So no, I love that. As far as, I mean, you don't have a crystal ball, but coming from like your business dynamic and starting the company and looking at it, okay, how long of a run do we have with this, this product being a product? I mean, yeah, short sales are still out there. However, they're not, something that we want to take on, or like a true opportunity where it gets kind of punted a little bit. But, where are you seeing like, hey, as a buyer's agent, as a listing agent, you need to, always be doing this, but really where is it kind of could be a vocal point for you, over the next 12, 18, 24, 36?
Right. So where would it make sense to shut the doors of Assumption Solutions would be if, in my mind, the government went nuts with printing money again and loose monetary policy, and interest rates went back down into the 3s and 2s. It's way easier to do a new loan faster. I mean, heck, my lender's doing VA loans in 2 weeks than it is to do an assumption.
Sure.
I never thought we'd get that low, so I can't say that it can never happen again, but hopefully we've learned our lesson with the pain that we are fighting through of the foolish choice to just have wide open, loose monetary policy. So I don't think that this market is going to be gone anytime soon, because even like I said, let's say somebody bought a home in 2022 and got that last rate at 3.25, right? And they live in that home 10 years. Well, 10 years down the road, they still have that asset.
Yeah.
It would still make sense for a lot of buyers to say, yeah, I'm going to pony up the gap,
right,
and I'm going to take that over.
Yeah.
So I don't foresee it going away. The short sales were a different story because obviously the market turned in terms of value of property.
Right.
People being upside down in a home. I mean, we pretty much worked through it, I think, by 2012. And we're off to the races beyond there. So I think this has a little more legs, truthfully.
Yeah,
and
I would
you're
agree.
going to want to be involved in understanding this and being able to do these for a good portion of the next decade.
Yeah, I'm with you. I think I agree. I guess, Craig, kind of talking about the process, right? So, agent, getting this message, they're like, yeah, hey, this is a viable option. Talking to my client, hey, we need to take a look at this. We come to an agreement. How should they now go about the process of, like you said, who do they need to reach out to their provider, then being able to reach out to you guys? Like how is kind of to fine tune, step through the process?
Sure. Step one is on the listing agent and the seller side, right? Connect with your servicer if you're going to offer this, right? Get your assumption packet. Ignore whatever they tell you and almost ignore what the packet says. If the packet says stuff that's you're like, well, I don't think I'm going to be able to get this done, we'll happily look at it and tell you where they're wrong. But then you market it and you've got a buyer who's interested. They found it because it's assumable, right? And you guys are starting to talk over a contract. You can reach out to us through our website, assumptionsolutions.com. I'm happy to give advice with regards to contracts as best I can. Obviously, I'm not a lawyer or licensed in every state, but as far as the things that matter, we can talk to there. When you've got the agreement, we need to connect with both your seller and your buyer, and we onboard them through an engagement process. And we have a secure portal where they can start uploading and downloading all the stuff on either side that we will need and collect. We try to make it simple and secure. That's the biggest thing, right? From getting this done is a secure place to do it because it's all financially sensitive information. And then we go off to the races. Obviously, if you have that packet, hopefully you're shaving 2 weeks off the process, because just getting the assumption packet takes a little bit of time from your servicer. So there's a little bit of legwork up there. You sell it with a regular buyer wants to get a new loan. You have the packet, it's just junk from there. Obviously, you're never going to use it. So, and then we're off to the races in processing and going through the thing. Now, I will talk a little bit on when you first get the deal going. We don't issue new loans. We don't have to be licensed. We're not loan originators. My head processor, however, is my lender who's been in the business for 30 years. She knows what's going to pass muster and what's not.
Nice.
So we do a little bit of a vetting process on the buyer. And we have saved some agents some time and headaches and deals that weren't going to get done. Because what we say is if we don't agree to take on the deal, then you probably shouldn't stay in the contract because there's something there. We do run a soft pull credit check on the buyer, which doesn't affect their scores, but it lets us know, are they likely going to meet the guidelines of the loan that's in place?
Gotcha.
So if the deal doesn't go from there, then yeah, just kill it, in my opinion, and go on and find another potential assuming party or another buyer.
Right.
So.
I love that. I mean, it really makes it, a no-brainer to, be able to leverage and position you guys to help navigate through this process, especially being able to save that time and energy, right? Just think you're representing, you're the seller and, you get the buyer there and, it's a 60, 90-day process and you get, just all that lost time being able to remarket the property. So no, I love that, how you guys are structured and able to handle it. So Craig, any final last thoughts that, agents need to be thinking about to help, position and push this moving into the market, as well as, obviously give them best ways to connect with you to be able to dive a little bit deeper on this?
Sure. So I think it's very important, number one, to start understanding if you have this listing or if you have listings that have this ability right now, what is the market in your MLS? Like, how can you best expose it? Right. I think if you've got buyers that you think would benefit from this, and they've got down payments, you might want to have the discussion. Hey, can we do this? And then look in your MLS. Is there a place to search for it? Right. If not, get involved with your MLS. Start getting this out in your social media feeds. Start talking about this for sellers, for buyers, for people that you can help to get clients. Right. As far as resources and training, we're an open book. We'll give you anything we can. I frequently just give out my cell phone number to people to reach out to me, which I have no problem doing here. My direct cell phone number is 719-229-2060. You can reach us as well through our website, assumptionsolutions.com. You can watch our training videos there. You can sign up for any future trainings we're doing there. They're all free. You can get material to use from there. So our goal is just to be as helpful as we can, because we know the more this takes off, that's our business model. So
yeah, no, I love it, man. And it's really what this conversation and these episodes are really about is about bringing rock stars in to be able to really educate and share into this community. And so today was no different, man. I've got a page of notes myself, and I really appreciate you making the time, obviously Gary making the connection and having you on to get this message out to out to the community.
I'm happy to do it. Thanks for having me. It's been a pleasure, and I've enjoyed the process of. I'm not traditionally someone who's on podcasts or on speaking tours or on classes, but it's been a fun ride so far. So
yeah, man. And well done. And make sure you guys connect with Craig, Assumption Solutions. I know wherever you find this, we'll have in the show notes or the notes there to be able to connect with Craig and circle back. I think it's definitely just one other differentiation that you can have, positioning, helping to really position your clients for what's best for them. Sweet. Craig, okay. Thank you. Appreciate you guys. And we'll catch you guys on the next episode. See ya.